Yo, what up everybody? This video was originally intended on a bunch of S&P 500 setups that we took this week. But on Friday, I took one of the best trades that I've taken probably in the past 2 weeks. And a bunch of members in the Discord took this with me on Tesla. I want to go over why I took it, where I entered, where I exited, and why this was on watch. There was a lot of lessons with this setup, and it was a great way to end the week. And then I'll get into a few S&P setups that we took briefly. But before we get into the recap, I recommend everyone to follow me on Instagram at Investitrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. At Investitrade, the link is in the description below. But now let's get right into this recap. So first thing is let's go over the pre-market plan just to get some context. I post these every single day in the Discord of the setups I'm watching, levels I'm looking out for, and potential trading scenarios. Tesla has been on watch the past week or so as it's been developing really well, and today I really liked this setup because of the previous day's action. So what we were watching for was we were rallying inside of this 872 supply zone that I have by this pink box over here. And I said if NQ could hold up and it's bought on dips or it rallies, I'm going to be watching for interest on Tesla inside of supply to play calls, targeting the 905 supply zone. And this is kind of why I was watching it. So now looking back at the chart, I'm going to go to a daily chart so we could see it a little bit better. Let me remove VWAP. Tesla had a very nice downtrend, right? We were consistently making lower highs and we had a solid downtrend line. What I really liked about this was back in late February, we bounced off of a 705 demand zone and had a clean rally with strong buying pressure out of that. Then we got the rally and we were going to test that upper downtrend line and we acted as resistance and actually formed new supply. Then the market started pulling back and we pulled back into new demand, which formed from that very strong green day to the upside. So now looking back on that earlier in the week, we bounced off that demand zone, and the past 3 days we had some nice volume coming into the market with strong buying pressure and some nice candles that were expanding as we were going to test that downtrend line. So with that context, I'm going to go to a 5-minute chart. We had that downtrend line and we had supply above that we closed at right at it yesterday on Thursday, March 17th. So now the market's opening up and we had demand lower from yesterday's action that we were watching for a pullback into, or we were watching for strong buying with a strong supportive NASDAQ to play calls inside of supply targeting the 905 supply zone. So as the market opened up, we got a quick push up. And now looking back at NASDAQ, pull this up over here, NASDAQ prior to the market opening up hit this demand zone, and 5 minutes before the market opened up, we got a quick little pump up with heavy volume before the market even opened up. And as we opened up, we had some volatile action with a strong move up. So now not only NASDAQ bounced off demand, it's bouncing off of demand as well. And we have a supportive market as this is uptrending and it looks ready to explode with a strong rally. Same thing with Tesla. We opened up and we were developing some heavy volume in the market. We had over 240% of the average first 5-minute volume and over 171% in the first 15 minutes above average volume. So now going to a 1-minute chart, I personally do not like playing calls or going long inside of supply, but because of what we were doing with NASDAQ and because of what we were doing with Tesla, consolidating inside of supply, now my job as a trader is to figure out where I could enter that it makes sense and why should I enter and why that makes sense with proper risk management. So as we were moving up, we were watching the tape, the level 2 time and sales. I just added a full tape reading section to the A to Z course. And if you were watching the tape at this point, I do not have a picture of it. There was some very large selling at 879, 878, and even 880. So I marked this as a resistance level that there were large passive sellers. Now, when I'm watching the tape, now I've identified high volume in the market. I've also identified the context of a strong underlying NASDAQ and a strong underlying Tesla. At this point, also, the S&P 500 was rallying as well, kind of to support this thesis. Then we got that push up, and I could only show you what it looked like on Bookmap. I can't really show you what it looked like on the level 2 because now this is a historic order. And as Tesla was coming up to 879, you could see this large red line right here indicating a very large passive seller at 879 and 880. That as we were coming up, there was strong buying getting pushed into this level. If we are watching a resistance level break, we want to start seeing more aggressive buying coming into the market, indicating buyers are aggressive. Now in the intraday commentary tab at 942, I said Tesla's trying to break the high here at 879 resistance. Once we could get above, this looks good. And then also we were watching the S&P to rally into the 4411 supply zone if we could hold above the 80 level in the next 30 minutes. So we had strength with the underlying market. We had strength with Tesla. Now we just needed to spot aggressive buying on this. And at 942, if you were watching the tape, some very aggressive buy orders coming through. Again, I can't show you it on the time it sales. I can only show you it on Bookmap now that it happened. And then we got that quick push up and some strong market buy orders coming through above that area of resistance inside of supply. I took the market long at this point. My stop loss is above or below 873, 872-ish. I was risking about 6 points, 5 points to make potential 20 points if we got above into 900 bucks. So now I'm in this trade and we get a quick strong push up. Volume is starting to increase. My contracts at this point are up $2. I posted my entry and exit fills in the Discord if you want to go back and see them. And then we start consolidating around 883. Now this was a tough area of resistance. I posted it in the Discord that we rejected 3 different times after testing it, that I said if we could get above, this is going to explode. Then we started pulling back, and I think this is where a lot of traders, if they do not have a fully structured plan, are going to stop out, right? Let's just say we got long at this resistance, maybe we front-runned it, and we start pulling back to entry. It never hit my stop loss down here, but a lot of traders see red. They see their contracts, might be down 50 cents. They might be down 70 cents, and they freak out. They deviate away from their plan, and they stop out because they're scared that their analysis isn't going to work out, and we're going to keep moving forward. A pullback should not scare you if you follow your plan. We dipped right back into that 788 or 878 area, 877 area, and then automatically found a bid. Volume started increasing, and then we got that clean breakout above 883. And honestly, this thing started exploding. I did not expect the velocity of it. And as soon as we got to 890, right in this area, 891, the top of supply, I got out 90% of my position. Right now in this market, there hasn't been too much follow through, so I'm very protective, and I like getting out 90% of my position on a quick move when the premiums do increase. And I got out about $6 on the contracts from my entry. I was in at $9. I got out here 90% at 15.55. Go back in the Discord and see the fills. Then we start moving up again, and we start consolidating, a quick push above high a day, and at $900, at the point we hit 900, the S&P 500 hit this key supply zone right here at 4411. It is a very, very key zone. And at the same point, NASDAQ, this rally supported Tesla. NASDAQ hit the supply zone or missed it by about 5 points. So I'm okay. This is up. My Tesla contracts, like I played the 880 calls, these were up. I got in at $9. They went to $22 by the time of my 10% last exit at $900. That's a $13 increase on the contracts. One contract is a $1,300 profit. I got out at $900, right at 1012, and it was a great exit. I don't want to say I top ticked it, but I timed it very well. And then we consolidated, and I'm all out of this trade. Very simple analysis. Now we're just consolidating near the highs. It looks like it's ready to break out again. My original target was 905, but because I was watching ES and NQ, I had to protect myself, that my last 10% of my contracts at $900, which was tough resistance if you were watching the tape at that point. Wednesday, March 16th, we had FOMC, Powell, and the Fed talk about interest rates and the overall outlook on the economy moving forward. Usually we see chop prior to FOMC during that day, but there were some nice setups beforehand, and there was a trade that I took. And this also sets up new structure into the market moving forward for setups in the remainder of the week. and even the week after that. So to get context, let's first go over the pre-market plan, and then I'll get into the trade that I took. We had a strong rally on Tuesday, March 15th, and a strong rally overnight, formulating new demand at 42.31 and around 42.58. This 42.58 zone that we bounced at end of day is not how I normally draw zones. It was a little differently, but it's still validated as an area of demand. And we were also currently moving into 43.22 resistance, which gave the market a hard time to get above. Show you what this looked like. We had resistance back on March 4th. We could kind of call it supply because I probably would have drawn it to the high of March 4th, where we rejected it the following day. And then we also rejected it about 4 or 5 days after that. We had a hard time getting above the 43.20, 43.27-ish area and sold off every single time we hit it. So now overnight, we're rallying right into it. And I say this all the time. Different reactions bring different results. So now this is the third time testing it. Usually after a third or fourth time testing a resistance or support level, which is different than supply and demand, usually we get a strong break above. In this case, from the pre-market plan, what I was watching for was a strong break above this resistance for a quick scalp into the 43.45 supply. For me, and based on how I'm trading in this market, it must be confirmed by the tape. I want to see confirmation by orders coming into the market. Candle data is not enough for me right now. So now going back to a 5-minute chart, the market opened up. And like I said from the pre-market plan, in my opinion, there's never such as, overbought or oversold in the market. I don't really believe in that too much. But for us to rally from yesterday's lows to where we were, from yesterday's lows to where we were overnight, and we're opening up about 130 points higher without any real pullback, and other than these two new demand zones that did form, I felt like it was a little overextended. So we did get a quick morning rally, some strong buying pressure that did come in, and if you took this trade long, maybe above pre-market highs, I don't think it was proper from a risk to reward standpoint. Yeah, you could have made money off of it, but from a probabilities and a risk to reward standpoint, this really doesn't fit how I like to trade, especially in the first couple minutes. But this worked out for about a 20-point rally to the upside. Then we started consolidating, and in the Intraday Commentary tab, where I basically post my thought process, as the market's developing and what I'm seeing form. At 10:14, I said I'm liking the structure we see intraday. We're stalling right at that resistance as expected. I would like to see pullbacks hold as the 30-minute and the 1-hour charts look very nice. We're consolidating near the highs. We are creating new demand, and we're building volume for a leg higher at an intraday level if we pulled back. And I was watching that if we could get above resistance, we could focus on longs, targeting that 43.45 supply, which was this zone right here that we had above. So what it looked like at this moment was a quick pullback. How I view this is they made the market look like it was coming down, attract a bunch of short sellers, and they're on the other side adding liquidity to the market and filling a very large order. We could possibly confirm this watching the tape. This is Bookmap. This is a visual heat map of the level 2 and time and sales. As we were coming down, we had some passive orders getting filled and some aggressive sell orders selling into those passive buy orders. Then the market came back down and we started moving back up. At 10:14 is when I posted that I like the structure here. And really what confirmed this trade for me and why I took it long was this pullback was creating new demand. B, we were consolidating near the highs after rejecting resistance. And C, we were building volume to the upside. What I mean by this is as I was typing that out, the market started coming up around 10:10, 10:11 Eastern with some solid buying pressure building into the market. Then what's really key here and why I took this trade, other than the confirmations that I just mentioned, was look at this volume dot here. So all the dots show are aggressive market buy orders for green and aggressive market sell orders for red. At this point, there was a large order over 3,000 lots at 45.15, let's just call it. So someone was buying 3,000 lots of the S&P 500 at 4,000 4,315. Someone do the math on 3,000 lots. That is a very, very large position. And if we zoom in, we actually see one full order of 1135. And we were, if you watch the time and sales, you don't even need Bookmap for this. I just like Bookmap a lot because it, visually looks better. And I could see it without, confusing with orders, disappearing on the time and sales. But on the time and sales, we see an aggressive buy order for 1,100 lots at that point. Now I'm going to go to a 1 minute so you can see it a little better, because what's key here is the move didn't happen when we got that aggressive buy order that came in. This is what it looked like when that buy order came in. There was no clean rally when that order came in. So the market was moving down as those buyers were coming into the market. This is just setting up fuel for another leg higher. Eventually, we got to break above that downtrend line. And at 10:15, before this rally happened, I got long ES at 43.17. You could trade SPY options off of this as well, like I normally do. I got long because right after that aggressive buy order came in, let me zoom out here. Here's that aggressive buy order. As soon as this order came through, there was still buying pressure above that, and the market wasn't moving any lower. It wasn't a passive seller absorbing those orders. This was a true buy order, and then the market came up. As we started to see aggression from buyers, I can zoom in a little bit more. These dots over here, I took it long. My risk is about 5 points, 6 points below this low. The candle wasn't a strong green candle when I entered. This trade started working out right away. And right after I entered, I was up 10 points in the next 45 seconds. So it happened extremely fast. Then the next couple of candles, strong move up, nice break out of that flag. And I got out 90% of my position at 43.32. What it looked like on Bookmap was a strong rally up, just like this. Let me zoom out here. Just like this. And it looked a little extended, just like that overnight session looked. And as soon as I saw a buy print come in and the market move a little higher, I got out 90% of my position to protect myself. Yes, we could rally inside of this supply zone. It was only 5 points away, but I'm protecting myself after a quick 15-point rally on the ES above that resistance. So now we're above it, and it's really game on until 43.45. Simply just understanding the context that I just explained of what was going on here with the structure in the market, and simply confirming it with a tool like Bookmap on reading the tape and understanding the order flow. You could use the time and sales with it. You don't have to use Bookmap, like I said. You could just use the time and sales, but I like visually seeing it a little better. Very aggressive buy order. Someone comment down below the amount of money for 3,000 lots on the S&P 500. Then we started consolidating, and as soon as we broke below this low right here at 43.28, I got out at 43.27 and a half. The remaining 10% of my position just to protect myself. I didn't like this consolidation, and when I'm scalping with heavy size, I really can't afford a crazy pullback because I don't want to destroy my profits. Then we pulled back. In hindsight, I probably should have still been in this trade, and this is where I'm really in the Discord. Let me see if I can pull this up here, saying that there's no edge in this. We after this move is done, the volume came in, and we got that strong rally. After 10:15, 10:30, the next hour, there was nothing going on. First of all, look at the volume. Volume was dead. Second of all, look at price. Consolidating sideways. Someone in the comments let me know after 10:45, where could you and why could you have entered a new long position or even a short position in this area right here. I don't know who could. I don't know how anybody trades like that for a directional position. And in my opinion, there's no edge in that. I was telling members in the Discord, there's no edge in opening up a new position like this. Wait for new structure. Wait for volume to come in. Look at this. 2 hours after 10:40, even 10:30. Consolidation. Market moving slow, preparing for FOMC. How I view this is the market participants are awaiting a major market news announcement that is going to affect the direction of the market. Everyone's waiting. They know that a big move is coming at 2 p.m. Eastern when the Fed announcement gets released. So there's no edge in trading sideways action with low volume. Then we got that dip down, and then FOMC comes out. So what's key here is, in my opinion, I view FOMC as You could trade it, you can make money off it. Yes, there is usually clear direction, but how I trade is I find it to be a gamble if you're chasing a move. Let's just say you were late to the party and you see this consolidation and boom, the market starts coming down, heavy selling pressure coming through at demand. We take the market short at 42.55, not realizing we are in that demand zone from the pre-market plan. So everybody's fearing that the market's going to tank. What the Fed just said was awful. The market is going to come down. It's possible, right? But ignore all the noise. The chart and the market will tell us everything we need to know. We're selling off into demand. This is a key area from the pre-market plan. And when everybody's fearing and everybody's selling, that's usually a red flag to go off in your head to think of how those participants could get screwed over the most. Because when there is pain in other people's pockets, there's going to be gain in your own. So figure out where other traders are entering, weak money, bad retail traders. Understand where they might be entering, where they might be stopping out, and that's an edge in itself. A lot of people I saw were shorting this move to the downside, not realizing we were in this demand zone, and we got a clean bounce off of that. And this drop from earlier formulated a new supply zone. We rejected it a couple times, but really failed to move lower. Then we got above it, and that continuation move that we wanted to see earlier above this resistance level happened, and we finally got our end of day target at 43.45 supply. I didn't trade after that first trade. I've found to always chase a move after FOMC, and in my journal, I don't perform too well after the announcement. But the day following, the week after, this sets up the market for new structure, and the setups that are going to come from this is going to be very, very key. So a couple of things I just want to recap from this day is come up with your structure. For me, it's supply demand, whether I'm looking to target it or whether I'm looking to open up a new position, and use the tape or some sort of confirmation for you to, validate your trade. This was enough for me. And, I didn't get long as soon as I saw that, because that could have just said the market might have trapped a bunch of longs up here and we could have pulled back. But the intention after that buy order got filled was they kept putting pressure on the bears. Buyers kept aggressively entering the market, and that gave me valid confirmation, especially with the new demand forming, and especially with that trend break and the volume starting to build into the market. That was good enough for me to play long. I wish we could have got our supply target right away, but I'll never complain about that quick move. Simple, stress-free trade, understanding supply and demand, and understanding what truly moves the market.